Morning, good afternoon, and good evening to all. Myself, Vaibhav. Today, being Friday, everyone wants to leave early, but given the fact that markets have turned quite interesting in the day, I think most of the market participants won't mind staying a bit longer. The week-long consolidation of the US dollar index has come to an end with a sharp breakout on the bearish side after the Fed chairperson Mr. Jerome Powell didn't hint on any possibility of a taper of quantitative easing program. That means the taper in September is certainly off the table, while if it is going to start this year itself has been cast in doubt. A lot is going to depend on data and spread of Delta variant as per Mr. Jerome Powell's assessment. That implies we will be back to guessing game once more. This has resulted in unwinding of the long positions in US dollar. I think now with the bearish breakout, we can expect the US dollar to continue to trade on the back foot with the possibility of a decline towards the levels of 92, looking strong for the US dollar index. On the data calendar, there were no major economic releases for Asian as well as European trading hours. Moving to North American session, we had multiple data points for the US as well as Canada. US being the larger economy, we will consider US data first. The PC price index saw a rise of 4.2% in terms of year on year and 0.4% in terms of month on month for the month of July. The year on year reading is slightly higher compared to the prior month's reading of 4%. This helps the US dollar climb higher as PC price index is the preferred gauge of inflation of the Federal Reserve. It's a different story that the uptick in USD proved short-lived as Mr. Jerome Powell watered down the expectations of tapering of quantitative easing. One more data set which got overshadowed by Mr. Powell's speech is the final print of University of Michigan's Consumer Expectations Survey for the month of August. The inflation expectations are slightly lower at 4.6% this month. Decline in consumer sentiment is a lot more pronounced with the current reading at 70.3 down from 81.2 of the prior month. Let's take a look on the data points from Canada as well. The producer price index for the month of July is at 0.4% in terms of month on month and 15.4% in terms of year on year. This huge difference is simply because of the low base effect of the last year. Raw material prices in Canada were also higher by 2.2% in terms of month on month and 37.7% in terms of year on year in the month of July. Now let's shift our focus to the technical segment. We will consider the outlook for the dollar index first, and then we will also see if there are any trading opportunities in USDCHF. Let's start with the dollar index technical outlook. This is the daily time frame chart, and here we have this line with this upward bias. But now here, this chart was made before the speech of Mr. Jerome Powell. So we have the dollar index holding well closer to the 93, and that was the story for most part of the day. But after Mr. Powell's speech, we are seeing fresh bearishness, and now we have the dollar index trading below the prior low. This yesterday's low has been broken, and it seems like the dollar index might break below this trend line, this upward sloping trend line. And if that happens, that opens up the possibility of dollar index moving toward this next support zone, the prior swing low around 92 level. So this is the possibility we will be trying to exploit, and we will see if there are any price levels which we can target for optimum entry and exit points. This is the 4 hourly chart, and here we have the dollar index consolidating closer to the first resistance of this month's pivot point series. Earlier in the month, it was broken, and we saw the dollar index climbing toward the second resistance, which proved a turning point for the dollar index. And from there on, the dollar index went into decline, and on the lower side, this prior swing low, swing high, and this first resistance of this month's pivot point series actually turned into kind of a support, and we saw for most part of this week the dollar index holding closer to this 93 level and trading in a narrow range. But now that we have a fresh breakout on the lower side, I think it is quite possible that we will see the dollar index moving toward this next support zone, the central pivot point of this month's pivot point series. And we have only one more trading session left. I think one or two more trading sessions left in this month. So in those sessions, we can expect the bearishness to prevail, and we will be looking for opportunities to go short. And that is, I think, the prudent thing to do. The momentum has now turned on the sides of the bears, and the trade which to be taken should be preferably on the short sale side. So we will be looking for opportunities to short, and for that we can take help of this first resistance zone, the price zone of 92.9, and as long as price remains below for the dollar index, I think we can continue to look for shorting opportunities while keeping the stop loss anywhere closer to the prior swing high, or even the stop loss kept above these first resistance line should be good enough if we are going to look for shorting opportunities. And to optimize the entry and exit, we can rely on this SMA formation, where we have these three SMAs converging closer to the 93 price band. These three SMAs, the 50, 100, and 200 SMA, have converged because of these sideways price moves. We didn't really see any big moves in the week prior to this fresh breakout. And now that we have the breakout, I think we should start looking for opportunities to go short. And here the preferred entry point should be closer to this prior swing low. So for any new entry, the price band of 92.8 to 92.6 is going to be important, and I'm keeping this price band wide because we have these sharp moves in today's session, and as a result of that the volatility is a lot more in the dollar index, and we will have to trade accordingly. We can keep the stop loss just little above this 200 SMA, and I think it should hold well. We can rely on this convergence area to act as a major resistance in near term. So as long as price action remains on the lower side, we can be trading fairly confidently while keeping the stop loss little above this resistance zone. And on the lower side, the targets around 92 can be kept, and as is the customary practice, we go for the risk reward ratio of at least 1 is to 2. So whatever is your risk, make sure that the reward is at least twice of that, and accordingly plan for the target price. Now we will also consider the USDCHF. It's been a quite a long time since we last time considered the USDCHF for technical outlook. So let's see how this USDCHF is shaping up. We had USDCHF holding well prior to the release of the speech of Mr. Jerome Powell, but since then it has reversed course, and now it looks likely that this sideways range is going to be broken, and we can expect the move toward this immediate swing low of around 0.9050. So we have the possibility of a further move, and for that all we have to do is try to make sure that the risk we are taking is limited, while the reward we are targeting is good enough for that risk to be taken. So we have this consolidation phase with gains on the higher side capped around the first resistance of this month's pivot point series. On the lower side, we have seen the central pivot point of this month's pivot point series acting as a crucial support. So within this narrow range, the USDCHF has moved so far. But now we can expect a break below these central pivot point of this month's pivot point series, and if that does happen, we can expect the move towards next support, which is going to be this prior swing low, the consolidation low of around 0.9050, and mostly we will have to rely on the even lower time frame charting of the hourly time frame, where it was looking like that finally the USDCHF might go on to move higher, but that was before the sharp move on the lower side. Now that we have the fresh breakout, I think we can utilize this convergence area of the three SMAs, the 50, 100, and 200 SMAs, which are converging closer to 0.9150 to optimize our entry point. So the entry should be kept closer to this convergence zone. The entry anywhere in the price band, just little below 0.9150, should be good enough, while keeping the stop loss closer to this closing high of around 0.9180. And on lower side, the immediate target can be kept closer to this swing low, and if you are willing to wait, you can even wait for the USDCHF to eventually go on to decline towards 0.9050 level. So that's my take looking at the current price formation of the USDCHF. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. For further coverage of the market developments, you can check out the Decoscopy Analytics page. For starting to trade, the J4X platform has been provided by the Decoscopy Bank SA. We are also available on the Facebook. You can reach out to us on the company's Facebook page. Thank you all for joining in. Have a fabulous weekend ahead. See you on Monday. Till then, goodbye.